Hello. How are ya? Hi,
Hello.
Katie.
Hey, how are you today?
Oh, so good. So real quick, for all the ladies checking in, we just had an amazing panel on navigating as a minority founder. And then we're just going to whiplash everybody right on over to show me the money, because what do we need as female founders? Dollars. Money.
That's right.
So I get the incredible honor of navigating this panel with you two lovely ladies. And just by way of background, we get asked all the time at Ladies Who Launch Events, like, how do I get money? How do I raise money? How do I find money? How do I get bank loans? What is my process? And so we do so much as female founders, like building the brand, launching the company, getting our marketing, hiring our teams. But the capital side of it is often this like underground world where we don't really know how to do it. So we're going to break it all down. And when we were thinking about this panel, we really wanted somebody from the investor VC side and also somebody from the founder side who has kind of been there and done that. So I'm so pleased to welcome both of you here today. So I'm just going to turn it over to you, Katie, first as introduction, and just tell us kind of what you're up to and one word of how you woke up this morning.
Oh, one word. Okay, I'm more nervous about that in the introduction. Okay, I'm Katie Palenchar. I currently lead the Female Innovators Lab at Anthemis Group, a fintech VC, and the Female Innovators Lab is in partnership with Barclays. I come into the world of VC. We launched Female Innovators Lab about 14 months ago, and I was brought in to do just that. But I come to this world from a founder background myself and an operator in numerous startups as well. Sold my company in 2017 and used a variety of financing strategies to get there. So super excited to be here today. One word, I don't know, this isn't one word, but I was just super excited to have a reason to get dressed and get ready. And I know that's not one word, but.
We'll take a couple words. Totally good. Kaya, over to you.
I'm Kaya. I am the founder of SwayPay. SwayPay is an alternative payment method that plugs into online retailers and lets shoppers earn the best discounts by offsetting the price of their purchase with social posts. We're venture backed, and Katie and Anthemis were our lead investors, which is super exciting. And I come from a background of building a bunch of e-commerce businesses, also funded those in very creative ways, non-venture financing, and now I am going down that venture capital route. So I have lots of tips and tricks on all sorts of ways to finance businesses. When it comes to one word from the morning, I would say probably anxious, just because it's Q4 and I check how many orders we're processing the minute I wake up. So it's a crazy time.
Amazing. Well, thank you for taking the time today. And actually, we're going to just pop right into you from the founder's perspective. So you have started multiple companies, and previously you had not raised VC funding, and now you have a venture-backed business with SwayPay. So I'd love to just kind of kick off. How did you finance your first companies, and how did your perspective change when you decided to launch SwayPay?
Mm-hmm. So I actually envy businesses the most who don't have to raise money and that can really raise from their customers. And I'd say that that's just what we did for 3 or 4 years. There are certain businesses where you can't raise from your customers, which is what I'm working on now, but a lot of businesses you actually can. So, and when I started my first businesses, I didn't even know that I didn't know about the VC world or the financing world. I was just like, I have to sell my product, whether I have it or not. And so I did things like, Kickstarter. I did things like, doing pre-sales on my Shopify store. I would maneuver my way around Reddit, right, to kind of astroturf Reddit and drive traffic to our sites that way. Really weird creative strategies like sending Venmo pokes, like penny pokes on Venmo to get our brand in front of people. But really just trying to figure out every little tip and trick to get customers, even if, like I said, I didn't really have a product, in a way that I didn't need to spend money. And it's actually, it's pretty easy to get to your first, I would say, at least 100K, 200K in sales just that way. And I think what's interesting too is that a lot of shoppers are actually very primed with this idea of pre-ordering or, getting that kind of buy-in from them without actually expectation of getting the product immediately. Although, even though that's kind of, we're living in this instant gratification world. I don't know. This was like 4 or 5 years ago. So I think the landscape is actually very different. So I would say it's probably a better path to go and raise angel money, at the very least, if it's not a kind of a venture scale business, or kind of go straight to raising VC money.
Okay, so building on that, Katie, I want to kind of dive into your perspective. You have the unique experience of being a founder yourself and starting your own business, but now sitting on the VC side. So kind of building off what Kaya said, what do you think, like as founders are like sitting here like, okay, maybe I'll go raise money. It can be very glamorized. It's like, oh, you just got $1 million check and we're off to the races. Like, what is your perspective kind of working both as a founder and as a VC and kind of helping women through this process?
Yeah, I mean, the first thing that I often say is that I know people that have sold a business for $3 million and walked away with the same amount of profits as founders who sold a business for $50 million. Yeah. And I think people they just see this exit price and like, that's the way to make massive amounts of money. So even though I am a VC, like I am actually very adamant of like, really like that isn't the only way to build a business. And I think first and foremost to sit down and realize that you can build big businesses without it, right? But to really analyze like what is your market and how big is your market, right? Super excited about what Kay is building right now because it's pretty much every retailer and every shopper in the world. Right. So that's a massive, massive market. Right. Even in, just quite frankly, in building my business, I realized at a certain point in about 3 years in that I would have to create a whole other product line because my market was only so big and we had tapped so much of it. Right. So I think that's the first and foremost thing of like understanding and having like a conversation. And then that will lead you with yourself, like lead you down a path of what type of financing. It may be angel money. It may be massive amounts of VC money. It may be credit cards to a certain inflection point. So really, really looking at that market size. And there's a lot of good materials and exercises, even just online, if you're not sure where to start there.
And maybe just popping into the kind of the resource side, like any favorite resources or where they should kind of start to educate themselves?
Yeah, definitely on the market side. So like now I'm loving like Lolita Taub's newsletter. She's an investor, a former kind of operator herself, and there's a lot of good resources in that as well. But then the other thing, if you are looking at raising money, is the All Raise. They have a boot camp of like, should I be ready or am I ready and should I raise money for VC? So a good resource to check out there.
Cool. Super helpful. We love both of those. And then just to kind of tie in one more side, I mean, you, Anthemis is specific to kind of fintech world, but again, base level knowledge. There's tons of different kind of opportunities for women in a variety of different industries to raise money. And like, where do you advise them and how should they kind of reach out? Like, should they do their own research or is it just like a general, like, I'm ready to raise money, let's go after every VC that out there?
Yeah, I'm sure Kaya has interesting perspective. I'll give it kind of from my side too, and Kaya, feel free to jump in. I mean, I really, really think about the type of investors that you want. Look at companies that they've maybe invested in the past. Talk to other founders. I think that's really, really important today in finding investors that are good partners and how they're going to support you and what type of resources and what you need to build your business, right? Do they have someone that can help with talent if you're looking to build your engineering team, for example? But then on the other side, and Kay, I bet you're going to say the same thing of, if you have your top investor that you want to talk to or you want to pitch to, like warm up these conversations by talking to some other investors that you're like, like maybe this isn't like the greatest fit for me. It's not that you want to waste time, but it's like you want to really kind of get some feedback as you get to kind of your more top investors that you're aligned with.
Totally. And actually, Kaya, I'm just going to turn that over to you because I know we had a chat about what makes a good investor and kind of your perspective. So love to have you take it away from kind of what worked or maybe where you thought this isn't the right person for me.
Sure. So I can actually I can kind of walk you through how I actually went about this and what really worked for me, what didn't. So one thing, like when I mentioned that you don't really need money to get started, what I really mean by that is I think there's a ton of thought work that needs to go into what problem are you trying to solve, and why is what you're coming up with the absolute best solution for it. If you can navigate exactly, if you can answer exactly that question, the conversations become 10 times easier, you know, and you might be, it might actually be wrong. Your hypothesis might be wrong because you could inherently, for example, introduce new problems that you don't actually know you're introducing, you know, with the solution that you believe is the best possible solution to your problem. But nevertheless, you know, this idea stage, first round of money we're talking about. So I spent, I want to say, first of all, I had the idea for this thing like maybe 3 years ago. I didn't actually start really moving down the path of saying, okay, I'm going to work on this thing until maybe, you know, 2 years ago. This was January 2019. For a solid 5 months, all I did was market research, you know, and that was while I actually had, by the way, a job, right? Which is another great way to just like stay steady and stable while you really, really pressure test. Why is this the best solution to the problem that you're trying to solve? And so I did that for, you know, half a year, talking to customers. I remember, Katie, I told you guys, like I had stacks and stacks of research. I had talked to, you know, hundreds of potential customers nonstop for 6 months and really crafted what I believe to be the absolute best solution to solve the pain points. And it was so thorough that alone advances the conversation.
100%.
Yeah. And then when I started shopping for, first of all, I it's so funny because you can actually build a very, very bare bones iteration of your product. I'll call it even very rough MVP, right? You know, for almost nothing. And ours was a cringe MVP that we put out into the world and just got some initial signals to confirm the thought work that I had done. And this took a whole year, right, of thought work and then iterating into some flesh and bones. Then when I started shopping for investors, I knew that, first of all, Anthemis was actually only the second VC that I talked to. I had a term sheet from the first VC I talked to. Specifically, I think it was because I had done so much thought work that it just was easier for me in that sense. And then I just realized that there were two things I really needed. Personally, I needed, number one, I come from the e-commerce world, so I needed a really strong fintech partner because this was becoming very clearly a fintech product. And then I really, really needed a thesis and founder-specific fund because I am a solo founder. I didn't want to just go get a co-founder for the sake of raising money. I really needed someone who was actually going to really want to double down on female founders and solo founders. And that's, you know, how I actually came across Anthemis. And it was just such a right fit from the very beginning that I didn't, you know, I had the first meeting with Jillian and I was like, oh my God, like, I really hope that we could partner up. And so I think the biggest takeaway is probably do the thorough research on the actual product and solution and the partner that you want to partner with beforehand. And then it just becomes 10 times easier as you're going through the process.
I also remember you saying if you ask for advice, you get money. And if you ask for money, you get advice. And so I think you kind of went out there from you were telling your story. Yeah. By just kind of saying like, what do you think of this concept? And then you did have kind of your first check.
Yeah, literally the first person I asked for money was Katie. Like and that was the first check that I ever asked for.
So everyone go to Katie.
Well, I mean, I think a great point there too is that I think you also remember when you're talking to investors, and I think this was the biggest like takeaway when I came over the other side is like, investors have to deploy the capital. Like it, and right, and like every conversation that I have with someone, I'm like, oh, I pray that this is like a fit, right? Like every time, like we have pressure. And again, I'm not trying to say it's the same as a founder by any means, but to deploy this capital, right? We have obligations to our investors, to our LPs, to distribute capital into companies and to do that on certain timelines and in certain amounts. So like having that mindset going into meetings is remembering that they need you as much as you need them in so many ways.
Completely. So it's just switching gears slightly, maybe out of just the VC world. But so question to both of you from your experience. We've heard from, there's the 3 Fs to raising money: friends, family, and fools. So I'd love to kind of just get both of your perspectives on what founders should be thinking of. Should they be activating their friends and family networks to get started, and or like completely avoid that, and where else they should kind of go from the angel investing side. So Katie, your perspective first. Any benefits to that, and any other good tips or advice for the audience?
Sure. So kind of to like jump off of what Kay was saying earlier, I love the whole point about customer research and customers and talking to customers, and never feeling that it is too early to go talk to a customer. And someone said this to me once when I was thinking of business ideas, said, just because it's a good idea doesn't mean you should do it. And so really kind of looking at how hard it would be, how much capitalization, how long it will take. So I say all of that to understand, kind of to be frank with a lot, to thinking through these in the conversations that you have with family. And a lot of this is advice that people have given me of like, if you feel comfortable taking money from family, would you feel comfortable if you completely lost all of it, continue to have every holiday dinner with them for the rest of your life? Right. And I think even saying that, having that frank conversation, I've heard funny stories on the other end where a family member was very upset that when someone sold their company that they were never asked to invest. Right. So, I mean, I think friends and family's option. I think also educating if they haven't been involved in something like this is key. Give them information to read on how a safe note works. Give them examples of companies that have failed, that have made it. Give them the statistics. Give as much information about how this works as just as much about your business. So that is one kind of avenue with friends and family. Sometimes when I hear the term friends and family, and that's why I'm so excited to be doing pre-seed investment, I cringe a little bit, because that is the term and it is what it is, but it has this assumption that everyone has access to this, right? And so that's why, I'm super excited about pre-seed and pre-seed investing in general.
Can you maybe, just before we switch to Kay, give everybody kind of what is your perspective of pre-seed, and what does that even mean?
Yeah, great question. So pre-seed is really kind of the earliest of days. So it can be pre-product, pre-revenue, and it can be both of those things. You'll see that kind of as the market changes in different geographies, they may look at it a little bit differently, but we are actively investing in pre-product, pre-revenue companies, a mixture of both, one or the other. But I think, again, to what Kaya was sharing, there's creative ways to validate that, right? It's not that you just walk in and say, hey, here's my idea and this is pre-seed. It's like, I've had these customer conversations. This is what I'm going to build. This is how much money I think it will take, and so forth.
Helpful. Thank you. Kaya, anything you want to add from your perspective?
Sure. I mean, I think from me personally, starting a company and having that pressures from the company itself is already so intense that people and the relationships are that much more important to me. The relationships I have, and they're outlets for me. And so I have a rule of thumb that I will not take money from my parents. I won't take it from my family. And I'm a little bit more lenient with friends just because they're a little bit more attuned to the whole startup world, at least my friends. I just let a couple friends invest through a syndicate deal we did because they were practically begging me to do it. And they were tiny checks. Like it was, I knew that it was inconsequential to them. And it was really more them like getting a ticket for a roller coaster ride is really what they were trying to do. But I think the biggest rule of thumb is making sure that whoever you take money from, like Katie said, isn't concerned about losing it. Like it shouldn't even be a thought on their head. Like they shouldn't care. And even if that means, we had an angel who wanted to put in 100K and I was like, no, I really don't even want you to put money in, period. And they said, they came back, they were like, please let me put in money. I want to back you. So I said, all right, like, let's start with 25K because you can always get more later. You can't really give it back. And that's more of a conservative standpoint on my end. I think there are a lot of founders who are happy to take money from friends and family, but that's just more my rule of thumb.
I love that hard to get attitude. It's like, okay, well, you can only put in this amount. It's good. It's like reverse psychology for the investor side.
And I think having a conversation with yourself, whether you're venture backed or not. So even, in any type of business, of as the founder, how far you're willing to go with your kind of own capital investments, because it's very easy to get involved. And I look back even at some of the decisions I made in my own business, and thank God it worked out. But I look back and I'm like, wow, that was some crazy risky choices that I made, but I was so far in and excited and things like that. So just understanding upfront of like, this is how much I am willing personally to do, and constantly revisiting that.
Great segue, because I'd love to know from your perspective, building off of the Friends, Family, and Fools, did you invest your own money in your own businesses to start? And if so, where do you draw the line, or what are your recommendations for women founders out there who might be maxed out on credit cards or not knowing where to kind of like say, okay, enough is enough?
Yeah, totally. So, Kay, I don't even know if I've ever told you some of these stories. So, and this is not what I recommend to people. So, to start my business, I cashed out a small 401k, put money on credit cards. I ended up moving to New York eventually, selling my car. I ended up taking an SBA loan and putting up my house for collateral. So
Woo!
all of those things, yes. So we're just real talk here today. Yeah.
We said we were going to bring the real talk. That's
yeah.
Let's
it wasn't that they were like huge, significant chunks of money, but it was like a little here. I think my SBA loan, like zero, was around like $50,000. Yeah, that I was on the hook for. And some of these things, just to be like, I started to do, it wasn't, I did this to launch with no revenue. Then when I started to have revenue, to grow, I did some of these things. So there was different inflection points. It wasn't like I ripped all the Band-Aid off and was kind of standing there. But so, that being said, I think now, even like, so that was like 6 to 8 years ago, even now, so much more has developed as far as funding beyond VC, right? Love the ladies who launch grant program and kind of all of these interesting ways to finance businesses. I'm also seeing, just being on the fintech side, some interesting things pop up. And I don't have any concrete names yet, but I'm seeing kind of this trend pop up of like maybe like kind of micro loans, right? So it's almost like crowdfunding, right, for small businesses, but accredited investors are coming to a platform. The loan may be $25,000, but it may be $5,000 checks from accredited investors that are looking to invest in small businesses. The tough part about taking bank financing in technology is traditional bank financing, and there's also banks popping up to serve these technology needs, but they're really looking at collateral, right? Do you have a bakery that has equipment? Do you have an office and office space that we can use as collateral? So they're constantly looking for collateral. I think one interesting kind of financing strategy, and Kaya is great at this as well, is there kind of side hustles, like very simple things that you can use to like build up to get that business off the ground. Or saying like, I'm going to take a 0% credit card, but here's the plan of, if this doesn't work out, like how I'm going to pay this back and over what amount of time. It's more about the planning. There's also right now revenue-based financing that's popping up for entrepreneurs. So even if you Google revenue-based financing, you're going to start seeing some interesting mechanisms where if you have some revenue, right, they might loan you money off of that revenue. And I think that's really starting to become interesting for entrepreneurs as well.
So many helpful tips right there. So thank you. So don't worry, guys. We're going to like kind of break a lot of that down and put that in a recap. Kaya, did you invest any of your own money? And kind of how'd that go for you in any of your businesses?
So I think this is actually very important to have a really introspective conversation with yourself to understand what that even means for you. So for me, I'm very, very privileged to have a household where my parents are both financially, emotionally, and mentally supportive of my endeavors. And I know that like lowest I'll fall is my parents' very bougie couch, and that actually gives me a tremendous amount of security to say, yeah, I'm not going to pay myself. I don't have to take out loans. I don't have to do any of that kind of stuff. And personally, I don't care to have kids. I would prefer to live out of a van, like very minimalistic. I own maybe a suitcase's worth of stuff. And that's just like my preference. And so when it comes to how I funded my business personally, yes, like I have certainly, every dollar I make, I'm so cheap in personal living and any sort of expenses, that I have been able to siphon quite a bit of my money into my endeavors to really, like I said, rigor test the potential of the business, so that even, you know, if it's like making landing pages or whatever it is, yeah, like that's primarily coming from me first. But I have to say that I think if I didn't know myself best and that this is really where I stand and this is what I believe 5 years from now, I still won't want kids, I might have a totally different answer. And so I think this is a really deeply personal thing to like decide for everyone.
I completely agree. I'll just add my 2 cents onto this. I did invest my own money into my own business. And I think there was a stopping point. There was a moment where I said, I had a kind of a side amount and I was very comfortable with. But then once that amount got hit, it was like, no more. Like, and I think having whatever your threshold is, because I've seen on the other side where you keep going and then you just get more and more and more in debt. And it's so much harder to kind of get yourself out of that side, and be like, wow, how did I get here? So just know your risk tolerance and what your side basket might be. Okay, I want to just switch over to pitfalls. We kind of talked a little bit about them, but as it relates to any kind of legal ownership matters, having a board. So besides just, I guess, on the VC side, Katie, from your perspective, but like maybe what I've seen with other women of, you know, investing too much, like what do you see other women when they come back to you a year or two later and they're like, wow, I really wish I knew this 2 years ago before I signed up with whatever, or before I built my board with, you know, something else, anything that you've seen trend wise?
Yeah. I mean, I have 100 examples of things that I wish I would have done differently. But I think, like, first and foremost, like one of the biggest recommendations I have if you're going down this road, and again, either any type of founding a business, is to find a core group of founders, women, men, whatever, right? That are like your people that you can call at any time of the day and night and say, like, I'm in this position with my investors. I'm in this position with my lawyers, like anything. Like, set that up early on, build those relationships, whatever it takes, because that I cannot recommend that enough. So that's first and foremost, because the chances are that someone in that group has encountered what you're going through or can quickly connect you with someone who has. And you know, I think the other thing is that in having those conversations, you can also kind of do some comparisons of like, well, how much did you raise here? How much revenue did you have at this stage? And having like very clear, transparent conversations around that. If investors are interested in investing, and you feel that the stake is, you know, I think there's a balance of being realistic of how much the stake should be. But if you feel that it is like completely aggressive, right? If they're taking 95% of your business out of the gate, right? You also have to think of long term how that is going to affect not only you, but your incentives for your employees as well. And I think it's very easy to say, like, it feels a little silly to think that long term out, but you really need to, because people need to be on both sides, both investor, founder, and team, incentivized and capitalized to want the same things, which is, you know, growth and serving a customer in the long term.
No boards until Series A, period. Like, not even, no. And
Bold statement. Tell us why.
Because you don't need a formal thing like that, right? Like, your boards form naturally when during your pre-seed and your seed, you lean into certain people more than others. Then you know that, okay, that person should be on my board. There is no reason to have a board before your priced round. There's no reason to even have a board. Even if your seed is a priced round, you can wait till Series A. You know, if your company is moving forward, those are all negotiables. And I the reason I say that so emphatically is because I know, you know, I had situations where, you know, people wanted 5% of my company in a board seat, and I'm like, but there is no board, and they were pushing me for it, blah blah blah. Then I talk to my guy friends who are founders, and they're like, what board? There's never a board, right? There's sole board members, and so I think that's just really weird when founders ask for board seats prematurely. Sorry, investors, or really anyone for that matter. I've had advisors ask, I've had investors ask, whatever. That's red flag. before Series A, in my opinion, unless it's a very seedy seed.
And Kaya, be sure to share of like the difference between advisors, right, and having that board.
Okay, yeah. So I'm talking, when I say board, I don't mean advisory type board. I don't mean like, I think basically it's very similar to dating, right? Like you date and then you get married. You date advisors or people, and then you ask them.
I agree.
Then you get the ring.
I agree. I agree.
And do not let anyone tell you no. And you don't pay advisors; they pay you in time. Like that's just absolutely ridiculous. I hate hearing these kinds of things.
I love it. Real quick, any thoughts on accelerators that take equity?
Yeah, I mean, I think they serve a purpose depending on where you are within your company. I think depending on what the support and the services are that you need, I think having a frank conversation about what you're getting, and again, thinking of, well, how does that set us up long term? When people see that we did this or have this on our cap table, how does that affect the long term growth of the company? I mean, I think it really, really comes down to alignment. Are you aligned? Or are you just trying to take some quick cash in addition to some equity and kind of live another day? Because I don't know if that will really work out. But if there's a very real partnership there, I think, and that gets you to the next milestone. So that's the other thing that I would add to that is, you know, if it's $25,000, if that's really only what you need at that stage to get to that next milestone, great. But if you know that you need more money than that to make this work, like then kind of think of how you will get that additional money as well. I think that's why sometimes people say, oh, accelerators, because then founders get out and they're kind of trying to figure out what the next tranche of capital is. So be thinking kind of ahead of that.
Totally fair. I agree completely. We've also heard, I don't know if Lacrosia is still on here, but we've talked to her about accelerators and some other women founders, and they really have seen tremendous value. So I really think it depends on, again, alignment, what you said, and how much and where and kind of what your capital situation is. Katie, you have the immense pleasure of really supporting women entrepreneurs, but you also fund male entrepreneurs through Anthemis. So what do you see as the difference? Anything that kind of stands out to you, or any tips that you have for female founders as they reach out to, engage, pitch, follow up to kind of the VC world?
Yeah, I mean, I think one of the things that is getting better is that we're all getting, just like conferences and things like, you know, organizations like Ladies Who Launch, of like getting better networks and like kind of amplifying the ecosystem. I think that's something that's lacked for so long that, you know, guys have been able to, just because due to the industry, whether it's finance or tech, and there's been, you know, we've been outnumbered, right? So these networks grow, they amplify, they're bigger than maybe what ours were. Is that really leaning into those networks and asking, right? Like asking the questions, like Kaya said about like, well, why do you want a board seat, right? Like really not being afraid to ask questions of your peers, and not feel like, oh, like I don't know the answer to that, or pushing back on something that doesn't make sense to you. I mean, ask is like honestly my biggest kind of, and it sounds silly, but my biggest suggestion to founders, especially female founders: ask.
I love it. Kaya, anything from your perspective, like being a female founder and pitching to both a lot of male investors and female investors, and kind of any difference you've seen on just what that style or what's worked for you?
Yeah, I definitely have more of a controversial opinion than not, honestly. I actually believe in playing the game before you change the game in that sense. And so I'm like very masculine in that sense. I don't wear a ring. I have short hair, simple clothes, like nothing flashy, like very plain aesthetic. Like I essentially resemble a boy, which is, it's a little controversial in that sense, right? But like, it's really more of confirmation bias. It's really just like presenting yourself in a way that you know that this person is going to easily kind of receive your information. And that's just the route that I choose. Other founders choose the totally different route of being fully themselves and, you know, saying that either take it or leave it. And I think you just have to find and strike your balance accordingly. And I will say for this raise, I've actually been very, very fortunate to not have had to even do that, period. Like this is more of a preferential thing, my aesthetic, but personally, but I've been very, very lucky to find investors who really embrace diversity. Weird. I mean, isn't Katie, what's that sign on the Anthemis at in London? I fell in love with it. Like we embrace weird or something like that.
Bring your weird. That's actually one of our core values, and we've been quoted in the media as the fintech weirdos.
It's very it's very true, and that's what actually made me fall in love with them to begin with. But that's the alternative, right? Is like really, really opt for when we're in, from the very beginning part of the conversation, how do you choose investors? How do you find investors? Opt for investors who do really embrace diversity if you don't want to go the path of, traditionally playing the game.
And ask your investors, like, you should be completely comfortable now. How many female founders have you backed? How many female founders do you look at? Yes. Feel completely comfortable asking those conversations. And if there's hesitancy or then you're not comfortable with that, then you're not aligned in the right place. And it took me a while, to be comfortable in a place where hey, I like to wear lipstick. I like to wear makeup. I like to wear jewelry. And if people don't like it, then maybe it's not a good fit. But I still struggle with that as well of, it's just nature of wanting to do what's best for your business and adapting, because you are so, aligned with what your business, and you'll do whatever it takes to make it work. So, it's a line every single day.
Yeah. Well, again, I just brushed my hair for the first time in 2 weeks. So
So that's why I was excited to wake up today and do this. I have an excuse.
At an investor meeting, then that's the investor for me. So I want to just switch to resources. We're all about tactical tips here. So we've covered a little bit, but I'm going to share ours from Ladies Who Launch, and I'm just going to chat it in here. We have put together a variety of different resources for our favorite kind of VC funds and different ways to just kind of help you find who is investing in women, who is investing in diversity. But love, Katie, I mean, I know you are on so many different kind of female founder office hours with Barclays and et cetera. So you mentioned a couple, with All Raise in your top favorites, but anything else that you're like, these are the things, these are the people you have to follow on Twitter. These are the events that you have to go to. Here's how to kind of start your networking process so that your capital raise is easier. Anything that comes to mind?
Sure. So, we're involved in a lot of different organizations. And so Anthemis group in general is 52% female out of 45 employees. We're 60% of our investors that are writing checks are female investors. So we're constantly looking for, as founders come to us, even if it's not a fit for our thesis or in general for investing, we're always trying to point them in direction. So Female Founded Club, I can drop the link in here as well, is a database where if you are raising money, you can put your company in this database, and investors are searching across this database quite frequently, specifically for female and underrepresented founders. I mentioned Lolita Taub. She has a startup investor matching tool as well. Again, can drop this in. And then Women 2.0 and with the W Fund has a pitch series every single week where they bring in multiple investors and have a pitch session. It's not a competition or anything. It's to really kind of expose angel investors, VCs, to different businesses that are out there. They run that pretty much every single week. And then I think finally, if you are in that stage where you are looking to figure out is there a business here? And I need kind of a thought partner around that partnership. And I'm happy to connect anyone. And it's not a traditional accelerator, even its name. It's Tackle Box. And I've been involved in helping some of the companies there. It's really kind of coming with the idea and doing what Kaya talked about, talking to customers. They'll walk you through every single week with a group of entrepreneurs that are going through the same exact thing. And so depending on your stage, a lot of resources out there. I can drop those all to you, Julie, or in the chat, and to make sure that all attendees today get access to those.
Awesome. Yeah, if we can drop those in the chat, those were super helpful. Great. And then just so everyone knows, we're typing furiously for all of this, and all of this will go on a recap on ladieswholaunch.org after the Thanksgiving holiday, because we all need a break. But yes, so in case you were sitting there like, I missed it, don't worry, we'll get it. Kaya, anything that you found particularly helpful that you want to kind of shine a light on?
Yeah, I think one quick little hack that I accidentally stumbled into was a good friend of mine, Packy, He writes this thing called the Not Boring Substack. Are you guys familiar with like Substacks, like email newsletters? So he's basically a thought partner when it comes to, tech trends. And I think has a follower base of like 14,000. No, I think now he hit 20K actually, subscribers, and he writes about tech trends. Right. And so they, long story short, did a deal memo on us and really broke down the ingenuity, as he called it, of our business model. And it, like, I have never had such a crazy storm of inbound interest from investors in my life. And so I think that this is an interesting strategy. I mean, I didn't do that on purpose. The purpose of that memo was not to get more inbound. It was actually because he was investing in the company and he was writing up about it. But I think Substack has really generated this like newfound way, right, of actually getting idea or your concept out to the right people directly into people's inbox. And so if I were to go back and maybe do it again, I might have actually tried to get Packy or somebody else, maybe if it's a fintech writer, if you're doing a fintech business, or a writer about e-commerce. There's like a bunch of these Substacks about in different verticals. So I might have actually tried to get one of these authors of Substacks to do a deal memo, or at least an analysis on my company in a long form content way, and then see, who responds from that. There are a ton of these, and there are angel investors in them. There are VCs in them. I mean, like Katie said, VCs are just as hungry to find what are going to be the next trends as founders are hungry to like go and pitch them. I think inbound is literally the best way to do sales to customers and to investors.
Wow, super helpful. Thank you. Believe it or not, we are almost at time here. So so many good resources and everything there. So we've started to kind of chat them into the stage, but how we like to end every LWL event is, what is one action you want every woman entrepreneur to take this week? So by Monday, we'll give them till Monday so they can have like a little bit of recap over the weekend. Katie, I'm going to kick over to you to start.
Yeah. So if you're an entrepreneur, I would find another entrepreneur that you can connect with, and some burning question that you've had right now. Have that conversation with them, or ask them, hey, do you know someone that could maybe talk with me about this, and not be afraid to ask.
Love it. Kaya?
I would say based off of, I think the biggest mistake I made previously was just not finding the right people around me. So I would say like number one thing that anyone should do always is to, go find the right people, go meet the right people, and whether they're thought partners or other founders or whatever, and start nurturing relationships early. I have several founders, like Katie was mentioning, that I, one, talk to on a daily basis, honestly, and then two, can call at like 2:00 in the morning, like with my oh shit moments. That should be done ASAP.
And I think just to wrap that up, what Kay was saying is that from the partnership level, from founder investor, when you're having a conversation, is like, is this someone that you do want to get on the phone with when you're exhausted at 9 p.m. if you need something? And Kay is one of those people that I love to talk to. And so when you have that chemistry there, it's like, it doesn't even feel like, oh, like I got to do work, right? So kind of really find that with the founders that you work with, or whoever it may be, advisors, etc.
I have to say, it's very rare. I think our relationship is pretty rare. Like
very rare.
Tell you probably way too much. Like this, you should not be telling your VCs or investors this stuff.
But I'm jumping in on these calls. You can add me in. Just phone a friend in at the 9 p.m. cocktail hour. Let me know. I'm there. I'll just like listen and be like taking notes.
We'll stream them. Yeah,
that'd be great. Actually, I would totally do that. New podcast alert. The K&K show. Well, ladies, thank you. I'm going to end on mine real quick, which is I'm going to call it get your head out of the sand, which means don't do what I did, which is, if you're really good at like branding and marketing and partnerships, you often want to do all of that and you forget and you put your head in the sand on the capital and finance side. So there's so many resources available through this. So if you're finding yourself weak, you don't know where to go, start with kind of what Katie we've chatted in here, and then just take an hour, take 2 hours, start the networking and process now. so that in 3 months, 5 months, 6 months, 2 years, you're ready. You have those networks, you have those connections, and you know what your options are. Cool.
Love it.
All right.
Thank you.
And Kate, thank you guys so much. I look forward to our 9 p.m. phone calls. Call me anytime. I'm going to let you guys pop off. I'm going to play cruise director for a minute for everybody on the line, and hopefully we'll see you real soon.
Take care.